I'm with Eric Maskin, who won the Nobel Prize for Economics in 2007. Right now, he's at the Institute for Advanced Study in Princeton. And I'm going to start by talking about the European debt crisis, because, Professor Maskin, just a few hours ago, we heard Alan Greenspan speaking in Washington, and his summation of the situation in Europe is that the euro is falling apart. Now, would you go that far?
You know, I don't think the euro is in imminent danger. Whatever problems it's in at the moment, and there are problems, can be postponed, at least temporarily. The serious problem, though, and this is a long-term problem, is fiscal consolidation. 10 years ago, the European Monetary Union centralized monetary policy. We have a euro now, but it did not centralize fiscal policy. So we have all of these member nations pursuing basically their own fiscal policies without any real oversight or coordination at the center. For the long-term viability of the euro, that kind of consolidation is essential. I don't think the euro can survive in the long run without that.
So, in fact, you're talking about a currency zone that looks a lot more like the United States.
Indeed. You can think of the United States as a currency zone. It's 50 little economies and a federal economy, which basically have acted like the European Union could act for the last 200 years, and with considerable success.
While we're on the subject of the United States, I just want to ask you what your assessment is of the United States economy. If you look at financial markets, it looks like some people are beginning to price in a recession.
Well, whether or not we have a recession, or go back into recession, is, again, something that we can do something about. Just as Europe can solve its problems, the U.S. can solve the problems of a double dip by following the policy that was followed in the first 2 years of the Obama administration, namely to do some public spending. The public spending basically came to a halt, the stimulus ran out, and not surprisingly, the recovery also came to a halt.
All right, so we need further fiscal stimulus from the federal government.
We do.
But what about the Fed? What role does the Fed play?
Well, the Fed has been the single institution which so far has prevented a recession, because they've been continuing to do quantitative easing. And that's exactly the policy they need to continue doing until we're well on the road to recovery. There's no sign at this point that inflation is likely to be a problem anywhere in the short to medium term. So monetary easing is just the ticket.
So then what do you respond to those critics in the United States? I'm thinking of Governor Perry in Texas, who say that further quantitative easing from the Federal Reserve would be treasonous.
I'm afraid that Governor Perry doesn't understand basic economics. I would recommend that he go back and learn from Milton Friedman, who himself said that the reason why the Great Depression was as great as it was the failure of the Fed to do quantitative easing at that point in the 1930s. We shouldn't repeat that mistake.
I want to just return to, the sort of spending that should be undertaken at the moment. If it were to be undertaken, how would you focus it?
Well, we have a number of important public spending priorities at the moment. Investments that are just ready for government support. Education and infrastructure probably are the leading ones.
Professor Maskin, thank you very much indeed for coming to speak to us here in Lindau.